What's good, everyone? My name is Toby and I'm back again with another video. Guys, welcome to Masterclass Bootcamp episode 4. Today we're going to learn about the real market. You see, in the real market, it's not the same as the lines that I was drawing in the previous video. This one is a real market. Like as I promised that I'm going to show you this in the real market. So without further ado, let's get into this thing. So right here, we have our correction, impulse, correction, impulse, correction, impulse. And then the last one is correction, obviously. So like the way I've explained in our previous episode, that correction is when the market breathes. It's when the market take a break, like in a bank holidays or in a NFP week. But then the impulse move, it's when the market is volatile or when the buyers or when the sellers are in control. Right now in here we have what? We're looking at our downtrend. This one is a downtrend. That means sellers are in control. This one is a downtrend. Then that means sellers are in control. What you have right here, we have correction. You see how those candles are moving. They are moving so slow. The market is forming back and forth, candle, back and forth, candle. This structure is a correction structure. Then in this pattern, we have what? Impulse move. That's why the market is moving so impulsive. Then we call it impulse move. That means sellers were in control in this one. Then in this one, the market moving so slow. Imagine that. I think the market took almost a couple of hours or days to fill in this distance. Look at this. It took almost 4 days to fill in this distance. But this one from here to here maybe took 4 hours or 8 hours or 16 hours. But in this one, it took the market days to fill this distance. Do you see? Then when you move into another one, this one is an impulse move. You see how fast the market was. In here, the market was fast. That means sellers were in control. See how simple it is? Then we could come in here. This one is a correction move. The market right here, we're experiencing what? A market break. The market was taking a break and move so slow. See? And after that, the market just shoot down. This one is a impulse move. I made a mistake when I wrote correction. I'm sorry, guys. Then we fix it. Okay, let's move into another one. Right here, I told you that I'm going to show you what is an order block. I'm going to show you where the order block most of the time lies and where the imbalance lies, and even where how to spot the liquidity. Okay, let's move. Right here we have what? An order block. You see, this candle is an order block. How do you spot an order block? Let me zoom into you. An order block it's an opposite candle before the rapid move, before the market start to be impulsive. That opposite candle, we call it an order block. See, if you can try your red angle right here. You see, the market just turned into an order block. The market was trying to fill in this imbalance. This one, we call it an imbalance because the market was so rapid. The market was moving very fast. So it left the imbalance right here, the imbalance candles. Right? Can I move? Okay. So let me explain further what is an imbalance, what is an order block. You see right here, you see this wick does not meet with this one. We call it imbalance. This week does not meet with this one. We call it imbalance. That's how you spot an imbalance. Then, how do you spot a order block? An order block is an opposite candle before the rapid move. But then, guys, don't get me wrong. When the sellers are in super control, not always the market will come and fill in the imbalance. Sometimes it will come and fill the imbalance. Sometimes it won't fill the imbalance. But then I can say 75% of the time the market fill in the order block and the imbalance. Don't get me wrong. So right here we have a liquidity. This one we call it liquidity. This one is a liquidity. This thing is starting to be black, starting to be white. Let me change it into black. Sorry guys. This one it's a liquidity. This one it's a, why do you say it's a liquidity? It's because there are orders that are being left right here. That's why the market was so slow. In my language we say like the market is creating a some candles right here. Then when you see a complex of candles like this, that means this one is a liquidity. Do you get it, guys? This one is a liquidity. That's what we call it, a liquidity. Then when you see the market break this liquidity, we're going to call it what? A break of structure. You see, let me delete this liquidity line because it's going to make our chart dirty. Then this one is a break of structure. We have a break of structure right here. It's an OBS. BOS. This one is a break of structure, which is BOS. This one is a break of structure because like the market came right here and break this structure. You see, the market came right here and break this structure. I was going to show you in 1 hour. Maybe we have an order block right here, or we have something here that makes a market to turn to come and retest right here. So I won't be able to go on 1 hour, but some days I'm going to show you. Don't worry, we're still getting there. So let's move into another example. Let's check another example. Let me check another example. Okay, let's go into head and shoulder. Let's check in head and shoulder pattern so that you will understand. Okay, let's try this one. Right, let's try this one. Hope you will understand, guys. The market is so different between the lines and the real charts. Okay, let's move into this one. Right here we have what? We have a shoulder right here. We have, hopefully I have a shoulder right here. We have a shoulder. Even this side we have a shoulder. Then this one it's a head. This one, let's mark it, guys. Let's mark this one as our head. This one is our head. Sorry guys, I had to pause a bit, but right now I'm back. Let's continue. So, and this one we have a shoulder. Then most of the time the market will create an imbalance right here. That's where this one is going to be your target. When you take your sell right here up until here, let me show you. This one is going to be your sell position from here to here like this. Then maybe your SL will be right here. You see how simple it is, guys. So let's move into another example. Let's go check FM pattern. Here is another example of M pattern. This one is an M pattern, but it's not that clear. It might be difficult for you to spot something like this. You see, let me show you how an M pattern is being spotted. See how it is. See right now it's much better. It's much better. So invisible enough for you to see, but this one is not that clear. I'm still going to check something for you, something nice for you. Then let's come right here. What do you see? This one is a clear head and shoulder. Do you see this one? Okay, let's mark like we analyze. We're going to mark what I made a mistake of this. Let's take this one. Let's mark our head, right? Going to mark our head. Our head starts right here. What am I doing in here? Here, this one is our head. This one. Then our shoulder is going to be this. Let's copy. This one is going to be our shoulder, our left shoulder, and our right shoulder is this side. This one is our right shoulder, left shoulder, head. See how simple it is. Let me zoom it for you guys. Let me just zoom it for you. See how simple it is. That's how it is, guys. So I've shown you head and shoulder, continuation pattern, order block, break of structure, liquidity. Then so far we can start analyzing the market, but there's another thing that I'm still going to show you, guys. If you have a question, I'll drop my WhatsApp link here. That's where you're going to be able to ask questions. If you are afraid to comment or like to write in public, you can text me private on my WhatsApp. Then I'll be able to answer your questions, or if you need some more clarification, I'll be able to answer you via WhatsApp. So without further ado, thank you guys. Thank you for watching. Don't forget to subscribe. Don't forget to like and share with your friend. Thank you. Bye. See you on episode 5.